An advantage of private mortgage insurance is we've got a lower principal balance, a lower note for the borrower, lower interest rate, or a lower down payment. So private mortgage insurance, or PMI, is a very common concept in lending. This comes from our finance section as well. Number one, it's an insurance policy, and it has something to do with mortgages. So there we go, PMI, private mortgage insurance. Now, what most lenders want is 20% down. So they want the sales price of the house, they want the borrower to put 20% down on the mortgage. Now, what you're gonna find when you get out in the real estate business is buyers are either unwilling or, in a lot of cases, unable to come out of pocket for that 20%. And so in order to help with that down payment, they've come up with the concept or the product of private mortgage insurance. So let's say that you have a borrower or a buyer out there that can't put 20% down, maybe they can put 5% down. Well, if they put 5% down and the lender wants 20% down, then there's kind of a 15% gap right there, isn't there? Well, that's where PMI comes in. PMI is an insurance policy that covers that 15%. The lender, the bank, they want 20%. Your buyer only has 5%. And so there's a 15% gap in terms of the down payment. So should the buyer default on that loan, the lender will receive that 15%. So PMI is an insurance policy that covers however much the borrower doesn't put down minus 20%. So the bank wants 20, the borrower puts down 10, well, PMI is going to cover the other 10, right? And so they want banks want a down payment of 20%. When your borrower puts less money down, less than 20% down, the PMI is going to insure the difference or the remainder. Now, obviously, if I'm paying an insurance policy, this is a premium, kind of like car insurance or homeowner's insurance. You're going to pay a premium. You're going to pay a premium every single month, and that's going to be tied into the mortgage. And so the mortgage payment for that borrower is going to be higher. So one of the disadvantages of PMI is going to be a higher mortgage payment because you're paying in addition to where you're paying the premium on that policy. But the question didn't ask for what the disadvantages were, it asked for what the advantages are. And the advantage really for PMI is it allows the borrower to put less money down. And that's really kind of where PMI has been a really strong product for buyers these days, is buyers just simply don't want to put or can't put a whole lot of money down on a property. And so yes, they're going to pay a higher note, but it is in turn going to allow them to put less money down. So going back to our question, you're probably going to see on the state test an advantage of private mortgage insurance, and you may see it as private mortgage insurance or PMI. They may put it in there either way, is a lower down payment.